Hello, my name is Maria Besupova and you're at my channel Fertilizers Jazz. Here we talk about events, trends, technologies in the world of fertilizers and agriculture. Please subscribe to the channel, put like to this video, and let's jazz! Today is 22nd of July 2024 and it is a weekly markets update. Let's have a look at the news of week 29 and see what are the next trends. Last week, the Indian urea tender was finalized with the counters, and there was no changes from the preliminary results. In total, volume confirmed by IPL is 433,500 tons, 80,000 tons for the western coast and 353,500 tons for the eastern coast. Prices are fixed at the level of $350 and $50 CFR to the western coast and $365 CFR to the eastern coast. The largest share of the supply is expected from Middle East producers, while about 100,000 tons is anticipated from Russian producers ex-Baltics. Producers from UAE and Bahrain have skipped this tender. Rumors are circulating that there should be another purchase tender soon, sometimes in August. However, there is no firm information at this moment yet. Market was also watching the situation in Egypt, where production at several plants was stopped at the beginning of the week, but then resumed again step by step. Despite securing already 21 LNG vessels with shipment through July-September, situation with gas supply in the country is very shaky. Both domestic supply and imports from Israel are at risk. Domestic production at the largest gas field, Zohr, continues decreasing. Total country gas production in January-May 2024 reached the lowest level in the past 7 years. From the other hand, strategic imports from Israel, that is responsible for more than 10% of Egyptian gas consumption, might be halted soon due to the political situation. Preparing to the war against Hezbollah in Lebanon, Israeli government might stop gas production at all major gas fields, Leviathan, Tamar and Karish, with only small volume to be produced exclusively for the domestic market. During previous gas export halts from Israel in October 2023 and May this year, Egypt plunged in darkness, and fertilizers production at all plants was stopped. Obviously, in case of full imports halt for the unclear period, Egyptian fertilizers production will be stopped again. Now, Egypt is looking for another 2 LNG vessels on top of 21 purchased already for supply in September, and also for the second floating storage regasification unit to increase potential LNG imports capacities. However, LNG gas price for Egypt is twice higher versus imported gas price from Israel, and current macroeconomic situation in Egypt is really gloomy. Thus, fertilizers market should expect more instability in terms of supply, maybe very soon, unfortunately. Still, for now, Egyptian fertilizers production is on stream at about 80% capacity. And last week, NCIC sold 5,000 lots of granular urea at $362 FOB and $367 FOB, but generally offers were at much higher level, $380 to $390 FOB. Buying activity across the regions was very slow, with no major purchases done last week. European farmers are focused on harvesting campaign, and also, crops prices are disappointing and don't support advanced purchase activity. Same situation is in the US. Latin American demand, specifically Brazilian, remains subdued for several weeks. Further crops prices softening and previous quite healthy imports levels don't push any immediate purchase activity. Some volumes that were expected to head to Brazil will be going into the Indian tender instead. Some interest for August purchasing is circulating among Argentinian and Chilean buyers, however, is not confirmed yet. Ethiopian purchase tender announced last week is not yet finalized. The offers are being still evaluated. The lowest offer is understood to be $363 CIF basis shipment from Oman, which rolls back at the level of sub 330 FOB. This level is much lower current spot levels, as well as lower than the level in the Indian tender. As a result, unlikely that Middle East producers will be eager to support such supply. The buyer is expected to evaluate the offers and revert with the confirmations, but in previous tenders, awards were not always followed by actual purchases. So we will see perhaps more details this week. Paper values corrected upwards for September and moved in different directions for August. Egypt FOB and Arab Gulf FOB values just marginally corrected downwards for August to the average of $355 and $345 respectively. US NOLA FOB value, on the contrary, increased by $10 to the level of $315 for the short term. This growth is driven by the concern that demand will become tighter at the end of Q3, and NOLA currently remains the cheapest FOB, which is not attractive for the suppliers. So, upward correction is logical and should bring NOLA level into parity with other export destinations, but further in the season. Also, increasing level is the result of rumors regarding the next potential Indian tender in August. Ammonium sulfate market is quiet, with no demand in Europe and very limited demand from Brazil. Compacted AMSUL values for Brazil are registered in mid-$170 CFR range, and cargoes from the vessels already en route are sold even lower than that. However, there is a hope that Brazilian demand, which is quiet for a month already, will pick up in August. And in fact, August sales are already conducted at the level higher by $5. Some support came from Indonesia, where Pupuk Holdings announced a large formula-based purchase tender. The buyer is seeking 4 cargoes for 20,000 to 30,000 tons each to be supplied to CFR Indonesia from September to mid-December. In total, the tender volume will be in the range of 95,000 to 135,000 tons. Formula based on China FOB price plus costs and margins. Chinese FOB levels remain mostly unchanged at the level of low $140 with bearish sentiment, amid low demand from the international markets as well as modest demand from domestic compactors. Nitrates and UAN markets are still almost inactive in all geographies due to seasonal factor. Ammonia market continues to be bullish due to supply limitations for immediate needs. In the east, modern production came back on stream, but exports will need some more time to pick up. Modern expects to increase exports in August by 25,000 tons from July level, but still it will be around 40,000 to 50,000 tons less versus usual monthly exports level. As a result, FOB prices firmed by about $5. Supply from Northern Africa lowered both in Egypt and Algeria, which resulted in $10 increase of FOB values. European buyers are seeking for small lots, however product seems to be available only as of second half of August. In Trinidad, gas supply curtailments start to ease, but still didn't come to norm yet. It will take another couple of weeks for production and exports to fully recover, so no surplus supply expected before September. In the US, prices also increased, which is based on bullish sentiment for the limited supply in the Q4 rather than on immediate demand. Phosphates market continues to be bullish, despite the fact that India is still out of purchasing. European countries continue a harvesting campaign with only very limited applications of DAP for selected crops. Most of the modest sales are for September delivery. OCP reported significant amount of DAP sales last week. About 35,000 tons were sold to different Western, Central and Eastern European countries at the level between $590 to $615 FOB for end July and mostly August loading. Another 50,000 tons to Western and Southern Asia, definitely not India, so most likely Pakistan, at $555–565 FOB. Also, 30,000 tons of MAP were sold to Latin America, other than Brazil markets, at $600 to $610 FOB level for August loading. Other than that, Jordanian producers sold 20,000 tons cargo of DAP to Turkey around mid-590s FOB level. Also, Turkish importer reported purchase of 10,000 tons of Tunisian DAP at 610 to 620 FOB level. In Asia, Pakistan was active in the DAP purchase market on the back of slow Indian trade. Pakistan puts in the import line at least 3 more cargoes, totaling about 110,000 tons, from OCP, as already mentioned, and from China and Australia. All deliveries are expected to be at the level of 610 CFR at least. Bangladesh DAP tender seems to be finalized with 434,000 tons. With these latest businesses for Pakistan and Bangladesh, Chinese suppliers further increased DAP prices, which are now indicated at $575 to $585 FOB, up by $5 versus a week ago. Domestic Chinese demand is firming, and thus availability for international sales will be tight in August and September. Brazilian demand for MAP is cooling down amid closing of application window for soybean. The CFR level is stable at $630 to $640 and softening. Buyers are reluctant for forward purchases to corn season at current high MAP prices. Moving to the fundamentals. European natural gas price remains unchanged at the level of less than 32 euros per megawatt hour. The heat wave starts to leave Europe slowly, and further weather forecasts shows usual temperatures. Together with record high stocks, this will push the prices down perhaps in upcoming weeks. US natural gas futures declined to the level of $2.1 per MMBtu, showing 6 weeks in a row downward trend. This is influenced by milder weather forecasts and reduced gas flows to LNG export plants. Decline in July versus June LNG exports volume happened mainly due to Freeport LNG shutdown, which has been offline longer than anticipated after halting for Hurricane Beryl. The terminal delayed 7 to 10 shipments. One processing unit has restarted last week, with others following at reduced capacity. However, LNG exports might not bring upward price correction, as stocks are record high and weather forecast is close to norm, no heat waves expected. Agricultural commodities continue downward correction, amid was the report of a week ago. Wheat prices fell to around $5.5 per bushel, the lowest level since March, with fresh US and especially cheap Russian volumes entering the market. Producers from Europe are in the middle of harvesting campaign and, being affected by heat wave, are now correcting their harvest evaluations. However, there is no sign of any upward correction opportunity now. Corn futures stay at the lowest level of 3.5 years for the second week in a row after the issuance of the report. Currently, corn futures are traded at $4.04 per bushel. Good anticipated yields and lower than expected demand from key regions doesn't fill the market with hope. We will watch further the results of the harvesting campaign and see how it will be. After hitting the lowest level on Monday last week, soybean prices rebounded to just above $11 per bushel. This was driven by USDA confirming private sales of 510,000 metric tons of new crop soybeans to undisclosed destinations, the largest daily flash sale since November. The USDA also reported sales of 150,000 tons of soy meal to undisclosed locations. So, this news helped the market, however, not in the long run. Moving to the shipping industry. Containerized freight index showed about 3% decrease last week, but still stays on the high level. The decrease is driven by the fact that some international shipments were subdued due to extremely high shipping costs. However, basic fundamentals didn't change, so we shouldn't expect any collapse in prices. The Baltic Exchange Dry Index dropped more than 4% week on week, amid downward pressure on capesize and panamax prices. Supramax and indices segment showed minimal activity due to seasonal factor. Thus, general index value corrected downwards. To sum up, situation in the urea market is mixed amid a lot of uncertainties. After Indian tender finalization with less than 500,000 tons commitment, the sentiment is bearish. However, continuing uncertainty with Egyptian production pushes the market up for the end of Q3. Israeli gas exports to Egypt might be stopped as soon as war against Hezbollah explodes. And of course, it is unclear for how long it can last in this case. Other regions' demand is seasonally slow, so we will closely watch situation in Egypt and next potential tender from India. Phosphate segment continues to be bullish, with Pakistan and Turkey being active in the purchase market last week. On the back of these sales, Chinese exporters increased prices slightly. However, softening demand for MAP in Brazil amid application window closing and uncertainty regarding Indian purchases don't support strong upward trend. With agricultural prices staying low, general fertilizers purchasing sentiment seems to soften step by step. So, let's see what is next around the corner, but it will be already next week. Thank you for watching, please subscribe to the channel, like to this video, and see you soon!